In the Brave New World series, today we are going to talk about Canada's economic outlook. And I've termed Canada's economic outlook as deer in front of a headlight. So you can see this deer, the way he's looking at the approaching car. He's frightened, he's surprised. This is exactly how I see Canadian economy present in the present state. Yes, tomorrow things can change, but let's discuss about where we are and where we are headed for. So this is OECD own number. This is OECD predicts Canada will be the worst performing advanced economy over 2020-2030. The lower the economic growth rate, the lower is the job creation. It's like an anemic growth rate. It's like you are existing, but you're not living. So this is what OECD expects that Canada will do over the next few years. Obviously, this is without any change in policies. So we call it muddle through economy. This name was John Malden came out with this this word muddle through economy. So this is how I clearly describe Canada today as a muddle through economy. So this is the reason is this is a clear reason if you see over there. The orange line is the wages. Okay. So you would find that over the last few years, the wages have been stagnant. And I'm pretty sure anybody listening to this podcast would know that there has absolutely not been any increase in wages over the last few years. But the house prices have gone through the roof. So if your wages remain same, but the house prices goes through the roof, then more and more of your income or goes towards paying for your EMIs if you have bought a house on a mortgage, or it starts going towards rentals if you're staying on rents. Both rents have gone up and house prices have gone up. And to make the situation worse, the mortgage rates have gone up over the last 2 years, complicating the situation. So this is leading to more and more of people's disposable income going towards maintenance, for their living rather than, having money for investing purposes. See how it changed, since till 2015-16, we are rebasing at 100. US and Canada were having the same standard of living kind of thing. Okay. Then obviously 2019-20 during the COVID crash, you saw that both had a clearly every economy. It was not only US and Canada. Every economy had a bad time. But US recovered fast. Canada did not recover. And if you look at 2015, if it was a base of 100 for a per capita GDP, what is a per capita GDP? Per capita GDP is a median income of a person in a country. So today you find that from 2016 to 2023, the median income of a Canadian has actually remained stagnant. But as you would know in the previous slide, that house prices have gone up, median incomes have remained stagnant. Whereas on the other hand, if you see, US has recovered smartly and it is at an all-time high. So I'm not going to talk too much about real estate, but first and most important thing, what drives the quality of life in Canada? Okay, whatever things you buy, have you ever thought about, where do we get all these things? Because Canada does not produce most of these things. So Canada, see on the top of the slide, you see what Canada sells to buy each and everything which you use it in your daily life. And the most important thing which Canada sells is actually, energy. Energy is what allows us to buy all these things at the bottom of this chart, which is on the blue side. And now we are having, our policies do not support this industry anymore. So if we have to maintain this quality of life, which we keep on talking about, we need to be making sure that we either have, if you're not exporting energy, then we need to have something different to export if it is not energy. So and since our policies do not support energy industry anymore, this is a chart of correlation between energy prices and Canadian dollar. If you see that the chart over the last 2 years, this used to be having a perfect correlation between energy prices and Canadian dollar. So if energy prices are rising, you could be rest assured till 2021, 2022 that Canadian dollar will actually follow the energy prices. But over the last 2 years, simply because of our policies, Canadian dollar is no more following in the footstep of energy prices. Let's say if Canadian dollar was following in the footstep of energy prices, today we would have been closer to 1.25 on USD CAD rather than 135, 136 on USD CAD. So it is market itself is also telling us that our policies are not supporting this fossil fuel. I'm not saying that is right or wrong, but I'm saying that if you have to maintain the quality of life, if you have to maintain our trade balance, we need to export something. And if it is not going to be energy, we have to find something else to export, or we have to start making more things in Canada. This is a very interesting chart. Since COVID, actually, you have the chart from 2014 itself. You would know that every economy, small businesses are the backbone of every economy. And but in this chart, what you see is that public sector employment in Canada has gone through the roof, more so after 2020. Private sector employment has gone up a little, but the self-employed, or we call small businesses, actually have flattened out, and in fact, they are down from 2014. I was having some data actually from COVID bottom till December of 2023. 86% of all the jobs created in Canada were in public sector. 16% of all the jobs created were in private sector, but this total is 102%. So 2% of all the jobs which were lost were actually in small businesses. So this is having more public sector and increase in public sector employment is actually is not a good way of running an economy. Today, 1 in 4 workers in Canada works for public sector. And as you know, public sector does not necessarily need to be as productive as private sector because you are not in a same way answerable to shareholders, which a private sector employee is, but a public sector employee is not. Post-COVID, governments have become powerful. Governments are deciding the winners and losers. And this is happening across the world. This is not only Canada. As per a report from an institute, 45% of Canada's GDP today is actually comes out of Canadian government expenditure. So where is the Canadian government spending that money? Canadian government is actually going to spend $30 billion towards subsidizing the EV production in Canada. Now, I am not going to get into and say that something is right or something is wrong. What I'm saying is government is allocating and reallocating resources. It is taking away the resources from one part of the economy and giving into the other part of the economy. So I'm thinking purely from a investment point of view that if in today's brave new world, if you have to think from investment point of view, that you should clearly follow what the government is doing. Although we all know that when the government starts getting into the business of the economy, then it is not the most efficient way of running an economy. Why did I pick up Mexican peso over here versus Canadian dollar? This was for the simple reason that US came out with CHIPS and IRA Act in 2021, 2022, and that very clearly mentioned that they were giving massive subsidies for companies willing to put their supply chains in US, Mexico, and Canada because all three are covered under the USMCA Act. Most of these factories actually went into Mexico, and Canada has not got any part of that USA because due to this US CHIPS and IRA Act. And since Mexico got a lot of these investments, Mexican peso is actually has appreciated a lot versus Canadian dollar. Anybody who gets investments actually will do better than somebody who does not get investment. That's how you find that Mexican peso is up 30% versus Canadian dollar in the last 2 years. It's like saying that your Mexican vacation is costlier by 30%. We also had a chance of getting all these factories. Europeans, any European, all European ally wanted this, this investments out of US CHIPS and IRA Act, and they pleaded with US to bring them under the same umbrella so that they could also benefit from subsidies under CHIPS and IRA Act. Canada did not need to do that thing, but Canada did not get any of those investments under the US subsidies. Coming to just a couple of slides on real estate. I'm firmly of the view that if crimes are rising in a particular city, then real estate prices are inversely proportional to increase in crime rate. And here I have an example which Luke Groman gave an example. A basket of high tax, weak crime enforcement cities, general obligation municipal bonds, apartment and property developers in those cities and commercial real estate in those cities are likely to secularly underperform in coming years. We have seen this deterioration happen before in the Rust Belt, and it takes a long time to reverse. And those cities do not have even started trying to fix the problem yet. So here, Luke Groman was talking about the Rust Belt in United States a few years back. But aren't you seeing the same thing in big cities like Toronto and Vancouver today? So if you believe that Toronto and Vancouver also represent what it is written over here, then roughly what you will find is a slow stagnation or slow decline in prices in these cities in the coming year, irrespective of the interest rates which people keep on talking about. Interest rates will not have too much bearing on the real estate prices going forward. If your city is having an increase in crime and tax rates are increasing in the city. A couple of years back, I had written a thesis about Calgary, why Calgary will do better than Toronto and Vancouver. It turned out to be right for the simple reason that uh, the reasoning was very simple, that Toronto and Vancouver was becoming very costly. And there was a lot of IT work which used to get outsourced to Toronto, but just because the city had become so costly, then that work started coming to Calgary. In fact, so much so that one of the large Indian tech companies had set up their Canada head office in a city like Calgary rather than Toronto or Vancouver. So you were having massive jobs which are coming to Calgary, and Calgary real estate prices at that time were very, very cheap. So that is was a simple reason that we took a call and I gave out a call that Calgary real estate will do very well. It has turned out to be true. Now I believe that if anybody is interested in Calgary real estate, that we will flatten out over here, but the prices will not come down in Calgary because Calgary does not have the same kind of, the crime part which we keep on talking about, what we have it in Toronto and Vancouver. So I think Calgary can continue to do well in the coming years. So just to summarize, our policies don't support our government policies don't support business growth anymore. They used to support real estate over industry. This led to rising real estate prices but stagnant income, which I've explained to you. Value of a house was going up, not your incomes, but you were happy. Why? So look at it in this way. Your incomes are not going up, but your balance sheet is doing well. Means your house prices are doing very well. You are feeling rich when you look at, you used to look at the price, look at the price of your house. Your house prices are going up. You used to feel rich, even though your incomes were not going up. So that's why you never felt a discontent. But now your incomes are also not going up and your house prices are also coming down. So you're getting hit both the ways. Today, for the first time, you are realizing that I don't have the sufficient income, right? So this is where we are today. Now, this was all our real estate prices also went up because supported by Bank of Canada, which was keeping interest rate low for a long period of time, and government, which went on a spending spree, which is still continuing to spend money. Now, Bank of Canada has raised rates, and government will be forced to cut spending on the essential items. They've still not cut the spending, but they will be forced to cut the spending. This is leading to a double whammy. Falling home values directly at the time that EMI started, monthly mortgage payments have started going up. So it is a double whammy which is being faced. So where are we now on Canada outlook? Because this is the most important part. Where does where do we go from here? So there are only three probable paths for Canada from here. It's like whatever OECD said. So I'm just putting it in the number one, decade of stagnation. I'm just very clearly without any policy changes. If you do not see any policy changes, you will have decade of a stagnation. It will be known as a lost decade for Canada. Second, inflate away the debt. This is how Latin American countries do it, inflate away the debt by cutting interest rates. Even though inflation has not come down, but cut in interest rates. This is good for home values, better for stocks, and best environment for gold investments. But inflation will become systemic and CAD will continue to depreciate. You will have a slow and steady decline in Canadian dollar will continue to fall. It will continue to fall against major other currencies also. The third is the easiest option, which is the best option for Canada, open Canada for competition. But I strongly believe that on both side of aisle, there is not too much of support for this measure, that opening Canada for competition. So this I am keeping it as the least likely. I would say it is between one and two. We are split 50-50. And clearly, that I would, and in all the three parts, the outcome for Canadian dollar, Canadian housing, and Canadian quality of life will be completely different. Thank you. Just some disclaimer because we have to show these disclaimers. Thank you. Have a good day.